This is Dr. Dryvonnetax. Do also follow me on my social media platform. Subscribe on this YouTube channel at Dr. Dryvonnetax to get more details, more updates, more practical sections on tax, economy, and finance. So for my last section, I was trying to talk about the fact that the removal of CRA was actually replaced from the first 800,000. So there's nothing to actually be scared about, but just follow suit. For the low-income earners, your take home without the rent, without voluntary, without anything, reduced by 413 naira, and for high income earners reduced by 94,000 naira. So today's topic, we actually be dwelling on the act itself, taking us through from section 28 to section 32, which has to do with ascertainment of total income of an individual, which has to do with pay as you earn, and it's found under chapter 2 part 7. So 28 talks about total income of an individual. So in this clip, I want us to know the difference between total deductions and eligible deductions. Total deductions are what you deduct from your total income in order to get your taxable income before you now get chargeable income. So now chapter 28 talks about total income, which is calculated from taxable income minus total deductions. So what are your taxable income? You have employment income, income from investing activities, from profits, from any such chargeable gains from disposal of assets. Then we now move to total deduction when it comes to loss that can be carried forward to exhaust it, capital allowance, income of individual that's exempt from tax. Then we have that's exempt income. Then we have income that's been deducted at source based on the Nigerian Tax Admission Act. That's for non-residents. You deduct withholding at source and it's the final tax. You deduct it from this total income. That is under section 28. Then when you now want to now talk about eligible deductions, is the one that you have to show the tax authorities, and they will have to ascertain your rent, ascertain that okay, you've paid NHF, you've paid NHIS, you've paid pension. So section 30 now moves to where we have eligible deductions. So you are going to have your total income, total deductions, that's the loss, the capital allowance. Then you now move to eligible deductions when we now talk about NHF, NHIS, pension. Then loans, interest on loans from developing an owner-occupied resident. A landlord is building his house and he takes a loan. Then we also have annuity or premium paid by an individual. Then the fifth is now rent relief. These are your eligible deduction, which is different from section 28 that has to talk about total deductions that are deducted from the total income minus total deductions before you now do eligible deductions. Then the tax authority has the right to ask you for evidence of these deductions, and peradventure they've given you an assessment. You are supporting it with the evidence, documentary evidence that okay, this is my rent relief, and peradventure you don't have it, it means they're not going to allow it, and peradventure you now find it later. They now stated that such repayments, set off of tax or reduction in any assessment shall be made and be given effect. That means they can ask, okay, you found it, okay, we are going to make use of it in so and so time doing so, if maybe the dex we are going to use it during tax audit and so no matter what, if you found your documentary evidence, you bring it forward to the tax authorities so that you can enjoy all your eligible deductions and your total deduction. So it is found in chapter 2 section 28. Then we have presumption tax, whereby it is a no when it comes to trying to calculate your tax. You cannot ascertain anything. Then they are going to presume tax based on minister's advice, and from advice also from the Joint Revenue Board, to be prescribed by the minister on advice by the Joint Revenue Board. So that is where pay as you earn is in the Nigerian Tax Act, from section 28 to section 32, different between the total income and the total deductions before you now do eligible deductions. Total deduction is coming to do with your loss, your capital allowance, and we now have different losses that is explained here to brought forward and ensure that if it's from digital asset, virtual asset, the deductions is from the same asset that you actually got it from. So this is what it's about when it comes to pay as you earn in the Nigerian Tax Act. For more details, I'm here. This is Dr. Dryvonnetax YouTube channel. Subscribe, and thank you for watching. See you very, very, very soon on a very, very important and trending topic. Thank you.